Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold. ICE Brent crude oil futures. An indecisive doji cross, capped for a second consecutive day by the combination of the October 2018 high 86.67, the flatlining medium moving average currently 87.12, and the 50% Fibonacci line of November 2020 to March 22 move at 87.41. Interestingly, the support was the flatlining short moving average below, currently at 84.99. It was nevertheless yet another close over the upper trend line, currently at 83.66, of the recent late November 2022 to date sideways triangle, and that's currently between 83.66 to 81.43. This triangle is highlighted in dark blue on my daily chart. I've been having some doubts about this whole sideways triangle idea, prompted by the false breaks both above and below. I will for the moment still stick with this idea, but be prepared for me to retire it, as I'm not altogether happy with it, especially how the move higher seems to be capped by the medium moving average. In the meantime, we have a primary target X topside in the 93.80 area, and a secondary harder to reach target X1 in the 99.80 area. Looking below the upper trend line, we have the flatlining short medium moving average, currently 82.90, the 61.8% Fibonacci of the old 2014 to 2016 move at 81.86, before we reach the lower trend line of the sideways triangle. Now, so far today, a lower open with a half-hearted attempt back up at the October 2018 high before coming back down to the opening area. Spot gold. A combined bearish engulfing pattern and bearish opening Black Mariposa yesterday. In some ways, it could also be seen as a countering move lower to the previous session's bullish harami. That was also an indecisive spinning top. Interestingly, the base of yesterday's action was the previously highlighted rising short medium moving average, currently at 18.54. I had previously highlighted a potential new recent pattern for the action since Thursday 2 weeks ago as a rare falling three methods pattern, usually something like 7 out of 10 times seen as a bearish pattern. Now, the jury is still somewhat out on this pattern, as it all depends on whether the short medium moving average and the 50% Fibonacci line for the whole of 2022 at 1842 manage to hold up prices. That is the question for this week. Above, we still have the lower trend line, currently at 1887, with a broken November last year to January ascending wedge pattern, which I've highlighted in dark blue. This pattern has already achieved its primary target on the upside, but we still have the harder to reach secondary target X2 up in the 1991 area. This latter one I'm currently pondering as to whether I should retire or not, and it all depends on whether the short medium moving average and that 50% Fibonacci line manage to hold up prices. Now, so far today, a reactionary move back up from the action based on the short medium moving average, surprisingly not. But for most of the move was still within yesterday's main body. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.